Apple facing a great wall in China. Hey, it's Friday, folks. Let's talk to Ernie Scheider, Reuters correspondent. Where are the lines in China for the iPhone 5 out today? They're not there. And also, UBS cuts its price target on Apple to $700 from $780.
Yes, analysts getting a little anxious that Apple is not going to sell as many iPhones as previously predicted in there. Jefferies is coming out and saying that they previously thought 52 million iPhones would be sold in the first quarter. Now they're cutting that to 48 million. So they're a little anxious that the Chinese consumer isn't going to jump on board with the iPhone 5. In fact, they're thinking the iPhone 4S probably will have sold about more than the iPhone 5. So,
all right, it looks like they need to make a deal with China Mobile, which is the largest carrier in China. This has been talked about for about 4 years yet, but still no deal between the two, between Apple and China Mobile.
No deal, and that would really help them get into the Chinese middle class and the consumer out there right now, which is very, very price conscious. So not having that deal definitely hurts Apple. In addition, there's a lot of Android operating systems out there and a lot of inexpensive phones. So if you're that Chinese middle class consumer, you're probably going to go for the cheaper option, which has very, very similar bells and whistles, rather than pay more for the iPhone 5.
Right, Apple dropped to 6th, I believe, recently in market share in China. Stocks down nearly 4% today on this news. It looks like they're one of the big losers on the Nasdaq today. All right, moving on to Facebook, also down nearly 4%. Lockup expiration, 156 million shares, relatively small given the previous ones that we've seen recently.
I thought we were done with lockup expirations. Here we go again. You know, this one, as you say, a little bit smaller than the last one, but it's not the last. We've got about 47 million more shares coming online next spring.
Right.
So when's it going to all end? I think that's the big uncertainty right now for Facebook.
All right. Do you think, though, that Zuckerberg is playing ball a little bit more with Wall Street? I mean, the share price, it's had a run-up of late. The prior lockups, the stock has held pretty steady. They're looking for ways. I mean, there's been a little bit of improvement in terms of advertising on mobile. They have a new app for the Android to show that they're really, trying to look committed to mobile there. What do you think?
Yeah, I mean, definitely they're trying to get out there and show that they're trying to increase revenue, but you can't just have the straight advertising on the Facebook.com. They realize that you've got to try to pull in revenue in other areas, and this is just nothing but a positive, and it shows, I think, probably the maturation of the executive suite.
All right, we're talking about Facebook. You know what that means. Time for, drum roll please.
The Zuckulator.
Zuckulator, he's down. It's a nail biter because he's down about $1 billion from the last time we checked, Ernie.
That's a lot of money.
Now, he said, that he's not going to sell his shares until the end of 2013, Zuckerberg.
I think that's what he was saying, no shares at all right now, which definitely instills some confidence. But, he's, not crying, I don't think, with the current net worth around, 13.6?
You don't think?
Probably not.
All right, let's stay on the tech beat here and talk about Adobe, one of the biggest gainers in the S&P 500 today. Stock's up 6%. Short-term things are a little bit grim, but long-term things are looking good based on this new subscription model for its Creative Cloud service.
Yes, this includes Photoshop, very, very popular suite of software that goes with it. In the past, you should just buy the box, take it home, and use it, tinker with it. Now, Adobe wants you to basically subscribe and be able to go online and then use the software. And if you pay a subscription fee on a set interval, you'll be able to get updates and other product bells and whistles and features from them. And also, you get a steady stream of revenue for Adobe. So that doesn't hurt them either. All
right, so that looks good. We should remind folks actually to watch our show Techquity later this afternoon, where Rob Searing will be fleshing out more on these tech stocks. Ernie, one of our faves here on Trading at Noon, Richard Scholes. The stock, after spiking yesterday, news from the Minneapolis Star Tribune that perhaps he was getting ready to make a bid by, I think it's Sunday's deadline, the 16th, much lower than what was originally floated out there. Now, looks like he doesn't have the money to make a bid. The deadline's been extended now to what, February 28th?
It's never a dull moment with Best Buy, and the basically extending the deadline continues this uncertainty for shareholders exactly where the company's going to doing. Richard Schultz says he needs more time to put a bid together. Says that he would like the full 2012 numbers to do due diligence.
Right.
I mean, my thought here is, look, 2012 is almost over. Yes, Best Buy is a retailer, and you've got the Christmas holiday season not yet finished, but still, you should be able to extrapolate to get full value and see what you should do for an offer there. That's my thought.
And maybe as things heat up, he'll be out and about, and we'll get a different picture of Richard Scholes. Is the mustache still there? Is it not?
We should have him on.
We should have him on, exactly. That would be great. All right, let's take a look at the broader markets here and see what everybody's doing. We talked about Apple weighing on the NASDAQ there, so it's down. Investors basically sitting on their hands with the fiscal cliff talks going on.
You said it, I didn't.
I said it, I know. I said that term. Throw it out there once again into the ether.
Fiscal cliff.
Yes, exactly. Folks not really wanting to make too much of a move right now, so as we see things are pretty flat. All right, thank you so much, Ernie Schneider. I'm going to move now to the hotspot. As I do, remember, check out the snaps at the bottom of the screen for more headlines of the day. And I'm met by Nadia Damouni. Hello, who's got an exclusive today, this ongoing saga, which has been really interesting. Sprint, Clearwire, and SoftBank. Is Sprint between a rock and a hard place? Walk us through this, because they offered a bid of $2.90 a share. Clearwire saying that's too low, but SoftBank, who's basically injecting the cash into this deal, saying we're putting a cap on what you can spend here.
That's right. So you've got to remember, SoftBank's come in, given $8 billion worth of money to Sprint to make themselves a much better, bigger player. And clearly, Clearwire is definitely the #1 priority for Sprint right now. Yes, $2.90 a share comes in a much lower valuation than what shareholders of Clearwire want. A number of minority investors still need to tender their shares to Sprint, and that includes Mount Kellett, that's come out publicly and said they think this is grossly inadequate valuations. We've seen Crest Financial. So yes, they've still got a little ways to go, but I have to say, Sprint knows what it's doing. It's been doing this for a long time, and SoftBank knows that it can't go above $2.90. Don't forget, in October, Sprint did buy a stake, a minority investor out for $2.97. So the cap right now is $2.97. Their offer yesterday was $2.90. 7 cents. I mean, they've got 7 cents to play with right now.
All right, and Clearwire's finances have been shaky.
That's right.
So it would, it needs to be stabilized there. SoftBank wants to see it stabilized as well.
Yes. So by third quarter of next year, Clearwire's going to have run out of cash. So it's on its knees. It will need to do some sort of options, whether it's with Sprint, whether it's with somebody else, but it will need to do something fairly soon.
Okay, interesting. And we have Sprint down just about 1% today. But you'll be following this story ongoing. It's very interesting. It's
interesting. I think we've got a lot more moving parts here. We have SoftBank's deal with Sprint. That needs regulatory approval.
Right.
People have been speculating that Sprint will jump in for Metro PCS. We reported that's not going to happen. T-Mobile still has that deal in place. So Clearwire is definitely on the agenda, and I would say in the next couple of weeks we'll look to see whether they will increase their bid price, whether it's $2.97 or whatever those negotiations will look like.
Right. Number 3 carrier, they want that spectrum. They need it.
You got AT&T and Verizon. These guys are killing them.
Absolutely.
Killing them and T-Mobile. So there will have to be some sort of play. And Clearwire Spectrum is the next generation spectrum, and Sprint wants to get its hands on it.
All right, Nadia Damouni, thank you so much. Remember, everybody, follow us on Twitter at Reuters Insider, and check out our YouTube channel with all the great videos, YouTube. Reuters.com/Reuters TV. It is Friday. Have a great weekend. I'm Lisa Bernhard. This is Reuters.